Harris here, Chief Market Analyst. So having a look at the economic calendar for the week ahead, the big kahuna being obviously the brand first, usually the first Friday of every month is going to be non-farm payrolls and unemployment jobs numbers coming out of the US. There's plenty of US news this week, and really I think anything from Wednesday all the way through, especially Wednesday and Friday, potentially a little bit with the jobless claims is going to increase quite a bit of volatility, especially on those dollar pairs, and they've been very volatile anyway lately. There's a little bit of cable stuff as well, so I'll be looking a bit at PMI data on Monday and Wednesday, and that is pretty much it. So lots to have a look at. I'll be curious, I guess, about construction PMI data. So really it focuses predominantly on the UK and US news this week. Let's go to the charts and see what's happening there. So having a look here at the VIX point areas, volatility has dropped right down to very nice lows. Market seems nice and calm and happy. Let's have a look at the dollar index. So this has been an interesting one. All right, if we have a look at it from the higher time frames, we can see that so far there is a bit of a rejection as price attempted to break outside of that range. Now, here's the thing. Ordinarily, when I see this type of situation, to me, the implication is price is actually going to keep going. But I do find it interesting. It is now the end of November. December is here. So this is the close for November's candle, which I would constitute, or I would describe that as a rejection and a failure to break out. But that doesn't mean it's over yet. We could very well see December continue to push through and break out of that. But what it also isn't is a clear breakout of that group. So if we have a look at it from or out of that range, I beg your pardon. Now, if we have a look at it on a weekly perspective, we've formed a swing high here. And so my expectation for now is to see price this week pull back down towards that 105 level, back in towards the moving averages, possibly as far as 104. For now, that would be my expectation. Then we'll see if we get a bullish candle and price attempts to break out. So what could happen, we could see this play out towards January. If it does come back into the range and take another run at that level, we could potentially see success, see it break out. And in January, in the new year, we see that dollar continue to strengthen. But for now, right now, immediately based off of this and the monthly candle, I expect at least possible further downside. We'll see then if we finish with a bullish candle by the end of the week. So I think next week is going to be quite interesting in its own way. Having a look at it here on the daily time frame, we've broken this previous low. So this uptrend that we had in place is now finished. We have now started a weekly retracement. So really it is now predominantly about the monthly and weekly time frames. There is no trend on the daily. So we're waiting to get clarification on that. Having a look here at euro dollar. Again, you can see very interesting, strong rejection down to these lows. So that was a big, strong breakout this week. Back up, closed back up inside the range. Relatively strong rejection there off lows that we haven't really seen since 2016, 2017. And the question is, normally when I see situations like this, when price is trending lower, the next candle can often actually continue down. So it's not that unusual to get a very similar type of just a continuation low. We'll see if that's going to be the case. When we have a look at it, as I said, when we have a look at it from a weekly perspective, there's no doubt to my mind that price is overextended to the downside. We haven't produced a confirmed swing low there, but it wouldn't surprise me to see if price does break these highs here this coming week, that we'll see price retrace back up to that 106.75 or possibly 107 level, even possibly as far as that 108. Excuse me. So that is my initial expectation this week. Then if we do produce ultimately a rejection candle there, we could see price attempt to take another run to the downside there. You can see from a weekly perspective, I beg your pardon, the daily perspective, we haven't broken the highs here. So this downtrend is actually very much intact. And because of that, I'm just going to place a support resistance level over here. This level is still intact, so we still would need to see that broken. Let's compare that and have a look at cable. So cable here, you can see, has broken that trend. So this daily trend is finished. And when we have a look at it, that actually points to this weekly trend. Now, the only other thing I've added here is this upward sloping trend line. You can see that so far cable has managed to stay above that line, has produced a swing low. So this time it does look as though it's produced a swing low in the weekly, and therefore it hitting up this week. If we break the high of this weekly candle, and we see similar breaks above the highs on the euro dollar, then it is reasonable to expect that it is going to work its way up here towards 1.28, 1.29. And, looking at the monthly here, this one is a little bit more indecisive, and therefore it wouldn't surprise me if we did get a bit of a swing low forming here if December especially decided to break the high of that. That is something I'll be keeping an eye on in the coming days. Let's have a look at dollar yen. So dollar yen, interestingly enough, again, has so far produced a very nice bearish rejection candle right off that level of resistance. On the monthly, And so we could get a potential head and shoulders pattern forming here. We know that Bank of Japan wants to keep this below that 150 level. So everything we're seeing with the price action here in terms of that makes sense. And so this week, what I'd be looking for, especially as the uptrend here is now turned into a downtrend. Let me just highlight that for you. We have a high here and a low and a lower high and a lower low. There we go. There is the lower high, lower low. And so we've broken this uptrend. Now we're in a downtrend on the daily. And so looking for shorting opportunities potentially with any kind of pullbacks, looking for price to come back into resistance areas, and then looking for shorting opportunities this coming week. Let's have a look at dollar Swissy, compare that as well. So dollar Swiss here, I was saying to you that I quite like this. This to me is very much more of a double bottom formation. We've got slightly higher lows. So for me, I do think that the momentum here is to the upside, which does really support that idea of a stronger dollar, interestingly enough, but certainly a weaker Swissy if nothing else. And we'll see if that's the case. We've got a little bit of a potential level of support here, whether we're testing that and whether that level holds. Let's have a look at dollar CAD. So dollar CAD to me as well, also one that had been breaking out of its range that had been in for quite a while. When you look at it here from a weekly perspective, we've got a very strong rejection candle there. If we break the low of this, I would also be expecting a bit of a pullback, possibly just in towards the top of the range. It might test that level for support again. Obviously, if it comes back in past those levels, then the likelihood is overall, especially if we're seeing moves back into the range on the other majors, that would imply that that dollar is going back, shrinking back into that range for now, that uncertainty about the US dollar continuing. But right now, I'm still seeing that potential for that dollar to break out. Now, look at it on the daily here. Here you can see you've got that bearish divergence on the MACD. You've got a strong rejection here off a level of support and resistance. So this can often then result in a change of trend. We'd have to be breaking these lows here. So I want to see a break around about that 139.25 level. And then we would see that shift into a downtrend if that is going to be the case. Moving on and having a look at gold. So gold, as I spoke about this last week, gold has no clear trend at this time. No clear trend. It did actually pull back on that weekly, back into the moving averages, produce a swing low, nice bullish candle. This following week, it broke the higher bit and then came back down into back within this range here with a nice little bit of a bullish wick here. So it's leaning bullish, but it doesn't seem to have enough buyers above this level to take it back up to those highs. And again, this is now the monthly candle. We have a swing, sort of a confirmed, let's call it a confirmed swing high on the monthly. But I would say that there's a lot of buyers below here. So this is very reluctant to correct to the downside. However, what I'm going to do this week is watch. We have no clear trend here, and so what I'm going to do is just mark these two levels quickly. So here on the daily, excuse me, we have, as we said, we had a downtrend here. We've broken this previous uptrend. Price has moved up and it is stuck between the highs and lows. There's no clear trend. So I'm looking for a break either above that 2721 level or below this 2536 level. Really, is it going to form a downtrend and break these lows? And if it does, of course, what will happen then is it's much more likely to pick up and accelerate and provide shorting opportunities. There'll be a whole lot of bear traders that will set up and look for sells and shorting opportunities there. Should it, on the other hand, break up here, the only level I'm really going to pay attention to, which is the strong resistance level up here at that 2790, makes more sense for gold to attempt to work its way up to that 2800 level. All right, so this just makes this more tricky, and you can see here that even as we approach these levels, we've got wicks on either side, so a lot of uncertainty at the moment, something just worth keeping an eye out for that. Okay, so crude oil continues to sit on my watch list for a longer term sort of breakout to the downside. You can see we've had a week down, a week up, another week down, so this is also making it incredibly volatile for day traders. Not really ideal to be hanging around it right now. It's stuck into this little wedge corner, then it's got a key level here and another key level here, so there's a lot of potential for it to bounce around and not really decide which way it's going to go. As I have said as well, is if we do break upwards to this downward sloping trend line, and especially if we break one of these key highs here, then this pressure to the downside is negated. Otherwise, as long as it stays within this, the pressure to break out to the downside becomes quite significant, and therefore I wouldn't be surprised ultimately in between, let's call it between now and, and June, over the next few months, to see a breakout and a big move. And the longer it takes to get there and break out, the stronger that likelihood, especially if that momentum remains bearish, the stronger that likelihood is going to result in a much bigger move to the downside to let off that pressure. It's effectively been consolidating, going all the way back to August 2022, and ultimately if it breaks out in 2025, that's almost 3 years of consolidation, and therefore a breakout would result in a huge release of pressure. Let's have a look at the global indices. Okay, so when I look at it here from a monthly, yes, we've got a relatively large candle here. We're just moving away from the moving averages. We're not too overextended. MACD is nice and bullish, so that looks pretty good, nice and intact. When we look at it from a weekly perspective, you can see the MACD trending higher. You can see prices consolidated, pull back into the moving averages here, and then broken higher. It doesn't look that overextended, not ridiculously overextended. You can see if you think of price here as within a channel, it's at the top of the channel. So if it did have a bit of a pullback here, that's fine, but I would not call this necessarily ridiculously overbought. And even here on the daily here, you can see that we still have convergence, the MACD producing higher highs and higher lows. That's on the Dow here. So what does that mean? Well, it means that when we look at this in isolation right now, the Dow is really very happy. It's very happy. It's not ridiculously overextended on the monthly or the weekly, and on the daily it looks really good, which means that at this point in time, look, price could pull back. It's going to provide another buying opportunity, and then we're going to have to see after that if it double tops or starts to run out of steam. But right now, this is green lights across the board. It is very happy and healthy. Now, there's a reason I'm telling you this. I'm saying to you that right now the Dow is super happy and healthy. Let's have a look at the S&P. So again, the S&P had a bit of a consolidation period over here. It's taken off. Again, very similar to the Dow, not that far away from the moving averages. When we look at the weekly, beautiful. It's had a nice pullback, nice little bullish candle here off these previous highs and just taken off and broken these highs. All of these with the MACD trending higher. This is, again, green lights across the board. There's no signs of weakness here. This market is very happy and healthy. So again, here, when we have a look at this on the daily, my expectation, and I think I said this last week, is that I would continue to see price continue to push higher and keep going. I'm not really seeing any red flags at this time. There's a little bit of bearish divergence. It is battling a little bit with resistance at this point. However, I still expect it to be able to break through this and continue upwards. Okay, so even if I put that level in there, I still think that we should be able to continue and keep that momentum going over that. So overall, no red flags there. There is a red flag that I have, or let's call it certainly an amber flag. I'm going to talk about that in the moment. I want to cover the NASDAQ and the Russell, and then I'll come back and talk to you about that. So when we have a look at, at the NASDAQ, the only thing I would comment on here are the wicks that have started to show up here at the top. They're definitely there. It's unusual. If we had a very strong market, they shouldn't really be showing up here. It's not that overextended. Otherwise, it doesn't look that bad. MACD looks fine. Here we've got the MACD looking good. We've had a pullback. We look fine. I'm happy. I have no issues with any of these two charts. Markets are looking strong and healthy, even here on the daily. Again, the MACD is matching that. It's convergent. This all looks good. I'm not worried about that. There's a little bit of this purple dashed line is the weekly pivot. It's sitting above the weekly pivot, so it's actually nice and bullish. That's an additional confirmation. All of this looking good. Let's go to the Russell 2000. So what I want you to think about here is that S&P 500, NASDAQ 100, the Russell 2000, and the Dow, they share some constituents. Obviously, the Dow and the S&P include the NASDAQ 100, but the Russell 2000 is another set of 2,000 small cap constituents, and therefore it gives us an incredibly vast sample size to have a look and which impacts the global economy. So one of the things I would highlight here, again, that monthly candle for a beautiful breakout and a pullback, and it takes off here. It's coming back into these old highs, these highs here in 2021. Looks really good. That's very healthy, not too concerned about that. Again, we have a look at it from a weekly perspective. You can see there was a little bit of a level of resistance here. Price broke out, retested it, taking off, bumping its head up here against close to that 2,500 level. So when you kind of look at the data that I've got here, it goes back to, kind of recent highs, I should say. Then when you have a look at it here on the daily, we're stumbling a little bit in this area. Excuse me. Again, that weekly and monthly, I think they both look healthy enough that I don't really have any concerns about price not being able to continue at this time. There's no real red flags there. But now I want to go and have a talk about where we are now entering, and basically this is the story, we're now entering bubble territory. Okay, so first of all, a couple of ways in which we're doing that. Bubble territory, when you look at it from a monthly perspective, there is no doubt in my mind that we have started to go parabolic. So when you look at the angular momentum of price here, we've started to head higher. If you even want to kind of include the correction here, we've really started to get a lot steeper. We're not straight up just yet, but I would say that it's fair to say we are in a bubble. We've had a really nice bear market recently, so we're still in a bull market. But a bull market, depending on its angle of momentum, can actually last a few years. The problem is that this is turning into a bubble. So you don't have to necessarily have to have a bubble immediately. In other words, we just got into this bull market. We could have kept going at a similar angle here for several years, but the market is heating up. It's accelerating. It's becoming more aggressive, and we are definitely in a bubble of sorts. The only annoying thing about that is that a bubble can last several years before it bursts. But I want to draw your attention to it. We are in a market bubble at this time, as far as I'm concerned. Prices happen to go, parabolic. It looks absolutely crazy. One of the examples that I gave in one of my free newsletters is, let's just have a look at this one, is Walmart as an example. You can see here Walmart has absolutely gone parabolic if you ever needed to see an example of something that does that. But we've got a few others. We've got a few other markets that are doing that. And so, yes, we're in a bubble. Yes, the markets are going parabolic. And yes, we need to be prepared now. So it means exercising caution, exercising a little bit of wisdom. It means absolutely not chasing the markets, reducing risk, taking profit more aggressively. As I said, this is something that could last for a couple more years, but the problem is that the longer it goes on for, the bigger the crash is going to be when it happens. If we had a bit of a correction now on this, and the market did manage to correct, we'd come back down into 15,000, probably into this area, maybe as far as 12,000, and we'd be able to recover back from that. But if this goes up and it goes nuts and it goes up to 25 or 30,000, when we have that correction, we could see a really, really big fall. So I'm cautious. I know we're still in the bull market. I'm just saying that I want to now start paying attention, just looking for those signs of it. But right now, other than that, the markets are extremely happy and very bullish. Okay, so Bitcoin as well, you can see here going straight up. It isn't just that it's gone straight up here. It's literally the size of this candle as well. This, I think, is one of the single biggest candles in Bitcoin's history. Absolutely huge. Just to be aware of that this is another sign, of course, that we are in a bubble. There's mania. When the market is doing stuff it's never done before, and it's doing it across different asset classes. That in itself, is a big, lots of red flags. Okay, so let's have a quick look at Ethereum in comparison. And Ethereum here we can see is looking relatively normal compared to the two here. Hold on a second. Yeah, kind of as we wrap this up, and this just comes more from life experience, but if we are starting to go into a bubble and there's going to be a big kind of a reaction to it in some ways, just one of the best things to do is to keep the cost of living, as small as possible for the next few years until things sort of calm down. Look, when it does get a bit manic like this, it has to kind of calm down. And one last thing, which I've just created now. I've created a newsletter. I've always been wanting to do a newsletter. I always thought that would be great fun for people. It's called the Market Mentors. So you can see the Market Mentor. It's at Substack. And the goal of this is there's kind of effectively a free subscription and a paid subscription. What I do in here is I'll do trade ideas, concepts, strategies, looking at stocks as well, commodities as well. So looking at cryptos, looking at different things. I would encourage you to register for this if you want these newsletters, usually a weekly newsletter, but especially because I'll be doing end-of-day trading ideas across the board in different asset classes. This is something I'm really excited about. It's something I really want to kind of do with my day, because I get to swim around looking at different markets and talking about different things. So it's brand new. As I said, I'll be adding 3 or 4 articles that are worthwhile to it each week, potentially more, but also not just that, but trade ideas, as I said, and market analysis. And so I'll also be doing more in-depth analysis. For example, in the paid section today, I'm going to be going through the stocks, because some of those stocks are looking incredibly overbought. So the ones that I used to do my weekly analysis will now be included in this for clients who want more detailed analysis. And the analysis you're watching now is my weekly free analysis. But there we go. So I look forward to seeing you all between these two different sources of content, and I want to wish you a wonderful